All right, say less. All right, cool. So we're gonna start off on a Harmonic Scanner, which is one of the products that we have access to. See if we have anything on here. Do. Let's see. Don't look like it. Yeah, don't look like it. All right, cool. Get rid of that. DeLorean, we got 1 minute before they call out something. What did I say? I must have meant sell limit. Yeah, approaching sell limit. Okay. So we do have a couple trade ideas we're going to be going over. I do currently have 2 trade ideas called out, Gbp Jpy and CAD Jpy. As you guys can see, CAD Jpy is approaching entry. Let's see if the DeLorean called out anything new. They did. CAD CHF, don't like it. All right, cool. I don't know if any of y'all were on the call yesterday, but it was a DeLorean that I passed up. I don't regret it because, like I said, I have my rules for a reason. But as you guys can see, this thing went pretty stupid. So as you guys see where I have the yellow line and I have the stop loss, I was really just looking to target this EMA, which is like one of the take profits. But as you guys can see, that thing ended up going for a nice chunk of change. So all of these are things that you guys want to be able to take advantage of just because it's all practice. So whether or not you take the trade, I always tell people, getting used to is maybe not the right word, but you guys want to be able to get comfortable with marking up a chart and just letting it play out. Everything that you're marking up, you don't actually have to take with real money. Because sometimes you just want to be able to see if it did what you thought it was going to do, but you don't want to have the emotional attachment to making or losing money, right? So this obviously did way more than what I thought it was going to do. So that's nice to see, but we'll go ahead and keep it pushing. All right, so let's look at the ideas. We got CAD Jpy. Excuse me. Gbp Jpy. I was looking at Gbp Chef as well. Let's see. All right, so we're just gonna go over these 2 for right now. AUD/USD could also happen tonight, but that's probably not gonna happen while we're on here. What's this? 71860. Let me set an alert for that. As you guys see, I have an alert for literally everything. That's what y'all need to be doing. Y'all need to have alerts for everything. I done lost my train of thought. What was this? 71860. And it just keeps you, aware of what's going on. So all right, I just like to be able to have alerts set so I'm, aware of what's going on in my surroundings. So we're about to go ahead and take advantage of that. GJ is working its way up. I'm gonna set an alert for this. 255.90. All right, cool. All right. All right, cool. So let's go ahead and get started finally. All right, so we're gonna go ahead and go over a couple different trade ideas. So I'm gonna go ahead and go over CAD Jpy first. I briefly went over this yesterday, but I'm gonna go into full detail today. All right. CAD Jpy, Oanda. So as y'all know, I like to be able to pull up these charts on a different broker feed so I don't have to erase my markup or anything like that. All right, cool. So as usual, You guys already know how I do, so I like to be able to mark up the chart from the 1 hour time frame. 1 hour time frame is my favorite time frame to be able to scan through the market on. So first thing I like to be able to do is, I told you guys I have like a 4-step confirmation list, which is basically going to be, I want to identify the overall trend of the market. I want to be able to identify my directional bias, which means what direction am I looking to take the trade in. I want to see, is there any weakness in the momentum? And I also want to see, is there any divergence? Okay. So first things first, what is the overall trend of the market? So if we're looking at this 1 hour time frame, from what it looks like, in my personal opinion, so it looks like the market dropped, right? Corrected, dropped again, right? Notice it took out this previous structure low, okay, which is a break of structure. And then what we could be looking at this move is, this is a correction, right, back into this strong impulsive move to the downside. So ultimately, we had an impulsive move to the downside. We had a correction. Their correction ended up taking out this low. And then right now, it looks like the market is in a deeper level of retracement. So if I were to take my fib from the high to the low, okay, what I can see is the market has given us a pullback to the 78.6 fib retracement level right here. So right here, right? That was the deepest level of retracement the market gave us. It also pretty much gave us like a head and shoulders pattern, if you guys notice. So this is going to be the head, right? Left shoulder, right shoulder. And then the market gave us that impulsive move to the downside, right? So we know the overall trend is a downtrend. Now, what I'm looking for is, as you guys already saw, I'm pretty much looking for a continuation. So my directional bias is going to remain for sales. Reason being is, once again, if we focus on this area right here, this was the area that reacted at that 78.6% based off of this bigger fib level. So what I can notice in this area is the market once again ended up breaking a level of structure. Okay. So notice how the market set this high. This high has not been violated, which means if the market continues to drop, we would pretty much need it to break this high to give us some type of indication that it might be done dropping and it might start going back up. Okay. So whenever we got the market to break below this previous structure low, right, we now are looking for the same thing we just saw over here, which is some sort of retracement. So if I were to take the fib again from the high to the low, like so, what you guys are going to see is we got another extension. Okay, we got another deep retracement in the fib levels, about the 78.6 to the 71%. And what the market ultimately do? The market hit, dropped, pulled back, and then gave us that strong impulsive move. Okay. So the market basically keeps doing the same thing. So this initial area hit off the fib base over here, right? This area hit off the fib base over here. And in both instances, we saw the market drop. So directional bias is a sell, overall trend is a sell. Now we want to be able to look to see if we have, some sort of momentum weakness and possibly divergence. So if we go to our RSI, remember what I told you guys as far as the momentum weakness is going to be indicated by whenever you see these white lines exit the purple box. That basically means that the market in that direction is getting weaker. So if the white line exits the purple box to the upside, that means that the upside momentum is getting weaker. So if you guys notice all over here, right, it wasn't by mistake that the market ended up falling off very aggressively. Now, each one of these spikes, as you see, the market kept going higher, but as many spikes that you had in this one area, it was giving you an indication that the market was getting weaker. And eventually this aggressive move right here, which cleared all these lows, was kind of like your signal, right? So we have similar things happening over here again. So basically where we can indicate the weakness is going to be from here, right? From here to here, okay? So in these two areas, we said that the market is spiking outside of the purple box, and it is showing us that it is getting weaker, right? So with that information, we know that if we see some sort of strong impulsive move to the downside, that's going to confirm that the market has exhausted to the upside, okay? So, of the line graph again. Whenever you say the name of the line graph, let me know what you mean. If you're talking about these, oh, this is called a RSI, sorry, RSI. So if you go to indicator and type in RSI, it'll be relative strength index right here. All right, cool. So we've already identified the weakness in the momentum. We can see it from here to here. What we do not have is any divergence, which is okay, because like I said, we don't always get divergence. There's no divergence here, so that's cool, because this is not divergence. This is going in the same direction. So we have 3 of our 4 confirmations. So the overall trend is a downtrend. My directional bias is also down or sell. And then we see that we have the weakness in the momentum, but we do not have divergence. Now, the final thing is going to be something called an imbalance. So if you guys notice, before the market broke this high, this was the imbalance that we were looking for the market to trade back into. Now, something I learned from one of the educators named Starboy, whenever you notice the market gives this aggressive move to the downside, right? But it's really slow and choppy coming back up, okay? This is how you can confirm that this is actually the momentum move right here. Reason why I say that is, let's look at how long it took the market to drop. So from this green last up candle to down here, right? That was about 2 days. 2 days and 15 hours. So from here to here was about 2 days and 15 hours. But now with it working its way back up, look how long it's taken. Okay. So, I mean, more so, I guess the better example would be to say this right here. So this strong impulsive move took about an hour, hour and a half, about 2 hours right here. The rest of this is kind of, it's a little bit different than this example. So the example that I was trying to say is the majority of the volume is going to be in these 2 candles that gave you like the straight drop. Everything else is basically the market trying to correct itself. So honestly, it would more so be something like this. Like it's been taking about 4 days for the market to work its way back up into this area. Okay. So what that basically means is a lot of times whenever the market moves down really fast but works its way back up slow, you're looking at this as the retracement to continue. If the market were to have a strong impulse up and then it starts working its way back down slow, you're going to look for continuations to the upside. So basically what we're looking for is we just want to be able to see the market come back somewhere in this imbalance, right? Give us some sort of fill and then give us a continuation to the downside where you can see the market might be looking to come back somewhere up in here if we can clear this low. So you might be asking exactly where are we going to look to enter, right? Exactly, right? You see this kind of stuff all the time. You'll see a strong, aggressive move, and then the market is taking a long time. Look, I'll show y'all another example, kind of getting off track. USD Chef, right? Look at USD Chef. So if I go to the time frame of interest, which is a 7-hour, look at how fast this moved down. Look at how slow all of this has been happening. So same example, right? From here to this peak low That took about 2 days. Now, all of this has been 2 weeks, right? So this is another prime example. It took 2 days for it to drop. It's taken almost 2 weeks for it to slowly work its way back up. So if you guys start noticing things like this, okay? Now, obviously, this is another example. So you see this strong impulsive move in these 2 big candles. Now look at how choppy and how slow this market was moving until it returned, reacted, and then dropped again. So this is really another example, okay, of the same thing. So strong move really quickly. Everything else, as far as trying to work its way back up into the spot, takes a really long time, and it's really ugly and choppy. Okay. So a lot of these are telltale signs in the market that this is going to be the direction that the market wants to continue going in. You just got to be patient and wait for it to work its way back up. So if we go back to CAD JPY, okay, I ended up focusing on the 10-hour candle, right? So as you guys know, what I like to be able to do is I want to be able to find the biggest candle in the highest time frame. So even though there's a nice imbalance here, I want to be able to find an engulfing / institutional candle. So I ended up working my way all the way up to the 10-hour time frame, as you guys see right here. Okay. And y'all already know how I do. Actually, let me back up a little bit. So one of the other things that you guys can use as a confirmation, notice how the market ended up reacting out of this imbalance right here. Okay. So if I were to scroll up and go to the 10-hour, you can see that the market actually reacted off of another engulfing / institutional candle right here. Okay. So things that you like to see is whenever the market does what's called mitigating, basically, you know, reacting off of a previous imbalance or a previous candle to confirm that it wants to keep moving in that direction. So this reaction is giving me additional confidence that this next reaction, okay, is going to do the exact same thing. So within this 10-hour candle, you guys know how I usually do. I like to be able to start off with the 50%, right? 50% of that candle, like so, right? 50% of that candle. And then I want to be able to draw an entry zone from the opening of the candle to the 50%. And as y'all know, I don't know what the hell. All right, cool. And as y'all know, final thing I'm gonna do is I'm gonna take the fib, right? Take that fib from the high to the low, put it on the regular settings. And I want to be able to utilize the fib level that falls within my entry zone. Now, on this example, kind of like how I spoke on yesterday, I couldn't actually use this entry just because it would have made my stop bigger than what I usually use. So I don't use anything bigger than a 40 pip stop. Actually, I take that back. I'm thinking of Gbp Jpy. So no, this actually worked out perfectly. So this would be an example of how I would look for this setup. And, you know, I'm targeting back, you know, down here-ish type stuff, but this is how I look for my entry. So whenever I define, you know, that the trend, the directional bias, the momentum, if we have divergence, I want to be able to look for an entry. Within that entry, I want to be able to utilize my fibs, right? So I want to see where the 50% is so I know where that threshold is, but it doesn't mean I'm going to enter out the 50%. I like to be able to look for slightly more aggressive entries just because with spread and everything else, I just want to be in the trade. I don't want to get too cute with my entry. I don't want to get too cute with my stop loss and miss the whole setup. So utilizing the fib level partnered with this entry zone that I created has worked out really well for me. So this is how I basically get every single entry that you guys get to take advantage of. So if I go back to CAD JPY, right, you guys can now see exactly where that is. And, you know, these are going to be the levels that we're targeting and pretty much so on and so forth. So as of right now, the market is slowly approaching. As y'all know, this is our third our third time putting in this damn pending. So It's looking like it's finally going to activate tonight. You know, God willing. Lord have mercy. I find my time frame. I find my entry on a higher time frame. So for me, whenever I find a possible area that I like, what I do is I start working my way up these hourly time frames until I find the biggest candle on the highest time frame. So if you see starting from the 1 hour, technically this is a engulfing candle, but it's really small. Go to the 2 hour, it's a little bit bigger. Go to the 3 hour, it's lower down. Go to the 4 hour, this one's a little bit bigger. So I'm literally just working my way up to the time frames until I find the biggest one. And the 10 hour, as you can see, ended up being the biggest one by far. So that's pretty much what I'm looking for. It's what's the word? It's pretty unique. I don't know anybody else that looks for entries like this, but it's, as y'all know, if y'all been following my trades, this should definitely work. So yeah, that's pretty much how I find my entries. All right, Gbp Jpy. Gbp Jpy is very similar. Let me go ahead and break this down as well. So both of these trade ideas were called out. So hopefully you guys are in the Telegram chat and y'all are taking advantage of these before they activate. Excuse me. Damn, this is old. All right. So similar concept, right? Now on Gbp Jpy, we can see this is technically a downtrend as well. How do I know that? If you guys notice, this high was never taken out. Okay. What did the market do? The market gave a very strong impulsive move to the downside. And what you can perceive this to be is a correction, right? We can verify that by, if I take the fib from the high to the low, right? We can see that the market ended up reacting at the deepest level of retracement, which is the 88.6 right here. You saw the market gave a reaction and then gave an incredibly strong impulsive move, which did break some structure lows over here. Okay. But what did the market do? It actually ended up pulling back and clearing these highs. Okay. Now I'm going to tell you what I see. Now, personally, between me and you, these were considered relatively equal highs, right? And in my opinion, the way that the market dipped slightly above to be able to then aggressively move in the opposite direction, this is what we would call a liquidity sweep, right? So whenever you have, you know, twin highs or twin lows or triple tops or triple bottoms, you don't necessarily want to trade off of that when it comes back. So some people might be looking at this like, oh, when it comes back, I'm gonna try to sell it again, right? So what the market actually did was the market was looking to take people's previous sell orders, where their stop losses are usually going to be placed above these highs. They wanted to clear that out before they moved the market in the direction that they actually intended on it going. So since it still did not come back and take out this original high that was set before this move started, I'm still looking at this as a downtrend, even though it broke above these two previous highs. This is really just validating this move more for me. Now, the overall move itself could just be, this could be a deeper level of retracement back in here to keep going higher. I'm obviously not worried about all that right now from where the market is. We'll get there when we get there. I'm looking at the concept that the market, as I said, cleared these two highs, right? And one of the things that you guys can start fixating your eyes to see is what I'm showing you. In instances to where you see the market barely peaks above or peaks below an area that previously had two highs or two lows, you can consider this a liquidity sweep if after it peaks above or below, it immediately and aggressively goes in a complete opposite direction, like how you saw here, right? It dropped, pulled back, and then gave us the actual aggressive move, right? So all of these are, you know, going to be the trend and my directional bias that I'm showing y'all. Now we're going to look at, you know, see if we have So once again, we don't have any divergence, which is cool. But we obviously do have the weakness and momentum. So if you guys notice right here, all right, these two areas, whenever the market started showing us that momentum was possibly getting weaker, we can identify these two areas right here. And as you see, in between all this, right, once the market created this second top, that was the ultimate reversal area. So this goes to show you, okay, the market officially became weak and exhausted here. And that is whenever we started getting our move to the downside, okay? So we've now verified all the things that I like to verify. Like I said, I know obviously I'm probably making it sound way simpler than what it is, because obviously it sounds straightforward, but you have to know exactly what you're looking for at the same time. So but like I said, this is pretty much all I look for. I don't get into a lot of the other stuff. I don't need to look at, the monthly, the weekly, the daily. Not saying it don't work. I'm just saying I just feel like it's unnecessary for me. So actually, let me go ahead and do this the right way. Let's look at the news real quick. Get in the habit of checking the news so I can get y'all right. So let's check Forex Factory real quick. See if we got anything maybe that might benefit us. Maybe we might get some news that pushes price in our favor. Who knows? Computer's moving dumb slow. I really need to get a new laptop, but it's all good. Damn, come on, bro. What is you doing? My Forex Factory is not. Yeah, this is tweaking. Everything else is working perfectly fine. Okay, here we go. All right, so today, so we already had high impact news on GBP. Doesn't look like it really did too much for the market. So we do actually have some high impact news later, New York session. So we're gonna have CAD and we're gonna have USD. We're not really trading either one of these pairs, so it's not really gonna make a big difference for us. No, I'll take that back. We're trading CAD JPY. And then I don't have any USD pairs right now that are ready. All these are gonna take some time. I just wish this would hurry up and pop up, because this is gonna be an amazing trade, but this is just consolidating like crazy right now. All right, so we already looked at news. So basically, if we come back to this is going to be like I said, basically the same thing as CAD JPY, right? If you guys notice, got a lot of imbalance up in here, right? A lot of imbalance up in here. So ultimately, what I want to do is the same thing that I just showed you guys. I want to be able to flip through these time frames until I find the biggest candle on the highest time frame. So look, as I'm flipping through, we're gonna start looking at all the engulfing candles that we see, right? So we have this one. Go to the 4 hour. As you see, this one's a little bit bigger, so I'm gonna make the box a little bit bigger. Right, 5 hour, that's smaller, so I'm gonna leave the box where it's at because the 4 hour is the biggest one so far. 6 hour, slightly bigger. Go ahead and fix that. Right, 7 hour, 8 hour, 9 hour, 10 hour. So 9 hour, 10 hour are roughly about the same. So as you guys see, these are going to be the biggest candles. Okay, so this is exactly what I mean by when I say I'm looking for the biggest candle on the highest time frame. Now, the reason why I do that, if you guys haven't figured out by now, is because this is going to be the most volume. So the majority of the volume in the market is going to be in this big ass body, right? The body of this candle, which obviously on the lower time frame is going to be where the imbalance is resting. Okay, so similar to how I told you guys before, I'm going to do the same step I always do. Now, Gbp Jpy had to finesse the entry a little bit, kind of like how I've shown you guys, just because I got to be able to make sure it's only a 40 pip stop. What happened? All right, so we're going to start off with the 50%. So as you guys see, 50%, just like that. We are then going to take the fib from the high to the low. So fib, high, low. Go ahead and change that back. And if I were to draw my entry zone from the opening to the 50%, right, you guys will see I actually have two different fib levels that fall in the entry zone. The 71% right here and the 78%. Okay. Now I'm gonna tell you guys why I was not able to use either one of these entries. My max stop loss is 40 pips. So if I use this initial entry, right, as you can see, that's too big of a stop. So I would then move it to the next one. As you can see, that's still too big of a stop. So basically what I ended up doing was I literally just moved my entry back until this number became 40. So obviously this is not like the exact entry, I'm just winging it right now, but the concept of it is this is basically what I do. So whenever I'm trying to get my 40 pip stop, right, it's a little unorthodox, but this is pretty much how I figured it out. It's like I'm just gonna put the entry where it gives me a 40 pip stop loss, okay? And boom, 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 boom. And that's pretty much how I would do that, right? So my entry would be relatively somewhere up there. Now, keep in mind, since I normally would like to enter from this area, I'm giving myself what's the word? A lesser chance for the trade to activate, because I normally don't look for a retracement past the 50% of the candle, but this is a situation where I have no choice. So it's less likely for this setup to actually activate, but obviously if it does activate, it's going to give me a better risk to reward than what I would normally have, seeing as that I would normally have my entry somewhere in here. Okay. So long story short, that's going to be GBP Jpy all the way up here. All right. Hopefully we can get this bad boy to push up. Like I said, GBP Jpy and CAD Jpy, we've been, waiting on these basically the whole week so far. And if you guys have wondered why do I delete the trade I did just to tell y'all to put it back in later, one thing I don't like doing, I don't like keeping a trade open whenever the session is over. So basically I stopped looking to enter. Like if I'm already in a trade, that's different, but as far as entering a trade, once the London session is over, which is 10 a.m. Central, 11 a.m. Eastern, any trade I did that has not activated by that time, I'm going to delete it. So if y'all haven't caught on by now, that's usually why I always say delete the trade basically the same time every day. It's always going to be about 10 a.m., 11 a.m. Eastern. Obviously not on the dot. It might be a few minutes before, a few minutes after, just depending on when I see it. But just so y'all know, so it's not just like, why does he tell us to delete it just to put it back in later in the day? That's why. I feel really uncomfortable keeping a pending open if it's not the session, because I don't want it to activate outside of the session, because that can drastically change the results of what I'm looking for. So obviously in these situations, it hasn't activated in general. So you could say you could have just kept it, but I don't trade like that. I'm perfectly okay with deleting it, putting it back in later in that day, deleting it, putting it back in later that day. It might be annoying for y'all, but like I said, there are rules that you need to be able to come up with in the market so you can stay disciplined. This is one of my rules. I do not keep pendings open after London session is closed, no matter how I feel, right? And I'll give y'all an example. It has been trade ideas that have been like right here, right? And then 10 a.m. comes and I'm like, damn, I would like to leave this trade idea open because the market is like right there. And maybe it'd only be a few minutes past 10 a.m. I can't be thinking like that, because once I break the rule one time, I'm going to break the rule a million times. So yeah, I have literally had examples where the market is like a couple pips away, but 10 a.m. is now hit. And it's like, damn, well, it didn't activate. I don't care how close it is. I got to delete it, right? That's how disciplined I am. Now, it's rare that it gets that close with the time, but I've definitely had a situation. I had a situation happen last week on AUD JPY. I was like a couple pips away. And then 10 minutes after, the session closed, that's when it activated, but I'd already deleted it. So just one of the things that I do. But yeah, so this is CAD JPY, GBP JPY, like I said, basically the same setup. So one thing I learned as well too, I'm not going to do anymore. So I used to tell y'all to split y'all's positions, basically meaning if we're going to take two sells on two Japanese pairs, you know, if you're risking 1%, put 0.5% on one, 0.5% on the other. I'm not going to say do that anymore, just because what I ended up learning is you don't know if one of them is going to activate and the other one doesn't. So I would just rather just regular risk 1% on every setup, just because I don't want to get in the habit of risking 0.5%, then only one activates. And then I take a trade later that I put the whole 1% on, and then it kind of starts, you know what I'm saying, kind of starts messing up the results. So just disregard me saying that before. So just 1% on everything. One thing I will say is if we have more than two of the same correlation pair, I'm only going to call out two. So if it's like 4 JPY pairs that look good for a sell, I'm not going to call out all 4. I'm going to call out 2 max, and then we'll just rock out like that. So CAD JPY, GBP JPY, we got about 10 minutes left before that boy John and Rock Kumar come on. Man, I just really hope this pushes up. I'll be honest, if I have to delete this again, I'm just not going to call this out. I'm going to just wait to execute my market, because I refuse to delete this and then put it back in again. That'll be like the 3rd or 4th time. So if GBP JPY don't activate tonight and I say delete it, I'm going to just wait until it actually hits this entry, and I'm going to just call that thing as a market execution. Y'all know I'm not a big market execution guy, but at this point, I'm through with CAD. I'm through with GBP JPY. CAD JPY obviously should happen tonight. GBP JPY should happen tonight as well, but obviously it's a little further away. But as y'all know, GBP JPY, when it starts moving, it can really move. So this is honestly not a lot of space at all. 50 pips for some pairs is a lot of space. For GBP JPY, that's nothing. So both of those should activate tonight. Similar setup. I'm not going to go over it because I don't necessarily have the time. This will be something I'll go over tomorrow, assuming I actually call it out or whatever. But GBP Chef, right? GBP Chef is also another opportunity for a possible sell. Okay, as you guys see, I have an alert. So if we break past this area, I will call this out for a sell limit or sell by market, just depending on if it aggressively pushes past this or whatever. But like I said, I don't want to have to keep calling out setups to just say delete. So I'm gonna just make sure I start setting alerts and wait for it to break some type of structure before I actually send it out. Otherwise, this could easily not come up here, consolidate, and then I end up having to say delete it. So I'm gonna just wait on this one. So I'm not even gonna break this one down, but this is another possible opportunity. Similar concept, as you guys can see, right? We got the imbalance up in here. And this is a GBP pair, which would correlate with GBP JPY. So we actually have 3 different correlations. We have CAD JPY with GBP JPY, then we got GBP JPY with GBP Chef. So we'll see how those work out. I can go ahead and get rid of this. Let me fib this one more time. Make sure this is good. Yeah. All right. What else we got? USD Chef. Not gonna waste my time talking about that. We need that to get closer. GBP, Euro GBP. We were looking for it to come lower. It still can, but as of right now, I have no idea. USD CAD. USD CAD came close to this high. What I would like to see, it might be, it's definitely asking, it ain't even might be, it's asking for a lot right now. What I would like to see is it work its way back down to our entry. We should be looking to enter off of this 2-hour candle that we see nicely over here. I basically took the 50% of that. And then we'd like to be able to take this higher. But as I said, at this point, it's a bit of a stretch and asking a lot. We'll see. Just keep that marked up just in case. GBP CAD, this is going to be something that we're going to be. So let me give y'all another example why I be telling y'all. I'll be having setups that I'll be waiting on for a minute. USD Chef, right? I've had this marked up since this happened January 31st. This has been 2 weeks, literally 2 weeks I've had this marked up. And I still don't know when it's going to activate. It might be another week before it gets up here. Who knows? But these are the setups that are going to pay you. So whenever you mark it up, just because it don't activate when you want it to activate, leave your markup. Because if you erase it, I guarantee you're not going to remember by the time it hits this area. You go see this after the fact, like, oh man, I forgot about that. That's why I always keep my markup. Always keep alerts, so I never forget. GBP CAD, right? Look how long ago GBP CAD happened. January 27th. This is another setup that's about 2 weeks, right? Obviously, I have no idea how long it's going to take for this to come back down. But if and when it does come back down, you want to know who's going to be ready? I am. You feel me? I am, right? I'm going to be ready to take this whenever it comes back. So I just want you guys to see, right? The reason why I have a lot of success is because I wait on my setups. Okay. I'm not in any kind of rush at all. I'm patiently waiting like a lion in the tall grass to be able to pounce on my prey. You feel me? And we actually got this gold trade. So I see my boy Slick on the call. We actually got this gold trade. I think gold. My boy, he heard the word gold. That man had to pop out of nowhere. That's funny. That's funny as hell. So basically, I'm gonna go ahead and break down this gold trade. Gold is gonna be, I think gold is a good opportunity. I told y'all I had stopped trading gold, but I'm gonna be honest, I had to come back and start trading gold because I missed out on this. This move right here, bro, I would have been all over this right here. I would have been all over this. We would have caught this whole thing. But I had stopped trading gold. But whenever I saw this happen, I don't know if y'all be paying attention. I'll be telling you about the manipulation wicks. I've told y'all a few times about the manipulation wicks and how powerful they are. This was an example of that. Let me show y'all what time frame we had it. So look at this, right? Look at this manipulation wick. And that's why this ended up dipping down right here. And then it shot up. Okay. So I saw that. I was like, yeah, I got to get back in the game. I just got to be more patient with gold, because gold doesn't give me a lot of opportunities based off of what I look for. But I'm gonna give y'all an example of what I see. Another liquidity sweep right here. So if you guys don't see it, I'm gonna show it to y'all. This is kind of crooked, but y'all get the point. So what I see is gold gave us a liquidity sweep above this high. All right. That also dipped into some sort of, it looks like there's probably like on a different time frame, probably some sort of imbalance over here. But we had a liquidity sweep right here. And then what did I tell y'all is a way that you can confirm if that's a valid liquidity sweep. If the market aggressively moves in the opposite direction instantly, right? We had this green candle, last up candle, and then literally the next candle just pooped on itself. You feel me? Aggressively to the downside. On top of that, right? Let's see if we got any other confirmations. Okay. So the primary thing I'm looking for, I'm gonna pull out the TDI for the TDI sauce. Remember, I told y'all on the TDI, whenever we get the market in these extremes, which are gonna be the yellow dotted line, it is on and popping. Okay. So that's what I see. So what I'm looking for is, as y'all already see, I got the markup waiting. I'm looking to see something like this. Come back and target these lows, possibly. Who knows if the market is actually going to drop this deep? It might just drop somewhere into this imbalance. So overall, this will be, you know, probably like the, I'm not looking for all this crap. We do kind of got some trend line liquidity though. I didn't really notice. Kind of, sort of. So possibly, yeah. I mean, as of right now, we do know that gold is definitely something that's going to start losing value as Bitcoin keeps going up and stuff like that, because gold is no longer like the standard, quote unquote. It is still like a safe haven, metals and stuff like that temporarily, but from what's being said, this is one of these things that definitely is going to be losing a lot of value in the coming years. So This could be something that could be broken, right? Some good trend line liquidity and stuff like that. We'll see. But ultimately, minimum, I would be looking for something like this. So even minimum, right? Just coming back to take out the low of this big ass engulfing candle, that's about a 7-to-1 damn near, right? About a 47 pip stop, about 305 pips. And then maximum, I would really just be looking to take it down here. I'm not looking for none of this shit. I'm just looking to take it down here. That's damn near 1,000 pips, about a 20-to-1. So same thing. What may happen, as I've shown you guys before, is what? Remember what I said. The market moves down very aggressively. It might take a good amount of time for this to slowly work its way back up. And you can already see it right here. Look at how slow and how small all these 1-hour candles are compared to all of this, right? See how slow and small these are? So who knows how long we might be holding this? This might happen this week. This might happen next week. Who knows? But remember what I told you. I always keep my markups just in case. Man, I ain't gonna lie. I'm just ready for this shit to activate, bro. This has been driving me crazy all week. Goddamn Gbp Jpy, CAD Jpy. So with that being said, let's go ahead and let me go ahead and tap into the boys real quick before I let y'all go. Let me tap into the boys real quick. Let's see if they available. Oh man, a little hungry. All right, let's see. The boys are back in town. Got that boy Johnny D. Let's see. Oh, they jamming. Hey, 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 hey. They be on there jamming to the house music, man. I ain't gonna lie. All right, y'all. Appreciate y'all as always. Shout out to my boy Slick, my brother. Always tapping in. Always appreciate you, my brother. Oh, that boy Hector. Wipe your face off, Hector. You over there looking like you about to fall asleep. Got my boy Butters. You feel me? Hey, Hector, stay out of trouble. That boy Hector just looked like trouble. Look at him. Look at him. Look like mischief. All right. Appreciate all y'all for hopping on my call. I'm about to go ahead and get on the GOATs call. Right by the GOATs. I'm talking about the European GOATs. Bah! You feel me? That was pretty bad, but don't worry about that. Shout out to my boy Slick H-Town. Hold it down. You feel me? I will see y'all tomorrow at the same time usual, 1 a.m. Central, 2 a.m. Eastern. Don't do anything in the market that I wouldn't do. Trade safe, right? Peace.